Good afternoon, all. Ira Epstein of Linn Associates with your financial market wrap-up, and we are now on Monday. This is the 29th of April, 2019, just about 3:45 p.m. Central Daylight Time. Wanted to do this in the past 10 minutes or so before we settle, so you get an idea as to what the NASDAQ is doing, because the odds are it's going to close higher than this because they settle at 315. We're now 30 minutes later. The impact of Google's earnings is hitting the market. They were down about $1.11 from the consensus, down about 600 million, I'm guessing, is from the revenue that they were looking for, and that's weighed on the market a little bit here. You can see the metals had a down day, even with the dollar a bit lower today. But this is a whole week of craziness in terms of earnings every day almost. Then we have tomorrow our trade mission. Mr. Mnuchin and Lighthizer will be in China. They'll be negotiating the trade deal. Then we have the Fed on Wednesday. They're going to give us their monetary policy, but we'll all be looking 30 days down the road to see what they were talking in these minutes. We all think it's going to be inflation-based, and they're looking over their shoulders to see what's going on there. We get information in the morning. That's France and Italy, how they're doing. Chinese economic data tonight. So you really have your hands full if you're watching what these markets are doing. You can see that I've moved, by the way, to the July Brent, and you should do so. Tomorrow's the last trading day in the June, so move your action to the July. It's a little lower as gasoline was. Grain's down a little bit as we're getting snow and rain mixtures. I saw the crop progress reports just a moment ago, and in reading them, I didn't think the markets were that far behind. But remember, this data's already a week old, so we'll see if that impacted it. And bonds and notes, watching them, you're starting to see yields come up a little bit, but again, this is such an important week, it's going to be all over the board. At this moment for the week, the market is up 1.5 points, and it just continues this from Christmas Eve, this phenomenal rally that this market has had, properly called by BlackRock a melt-up. I think that's a great term. And what it means is, with all this money on the side in the market, people just keep waiting for these 3 to 5% breaks that really are very elusive in the market as a whole to try to come back into them. We'll see if that keeps working. When we take a look at a daily bar chart of the S&P, well, you're at an all-time high today. It's that simple. You can see how the market is looking at higher lows, higher highs. You'd have to take out 29.14 to break the pattern of higher lows, higher highs, which is the definition of an uptrend. Even if it did it because you first made the higher high now and you went straight down through that, it would not be a downtrend. It's one thing to step out of an uptrend, it's another to create a downtrend. It wouldn't do that. The 18-day average of closes, where I would say the first real support in the market on pullbacks, right now it's around the 29.09 level. It's getting very close to that last break low of 29.1475. And what's been holding the market, if you will, right here from really advancing are the Bollinger Bands. Take the name off the chart. That's the first thing to always do. You can see when you hit these numbers, it's often a resistance area. You got up there, the numbers started going sideways. It's still acting like that. But what runs the day, from my perspective, is you have to have a hierarchy of technical indicators. At least you should. One filters out the other, so on and so forth. But typically, most analysts have one that at times it might stand out. And when a slow stochastic momentum oscillator locks in and embeds, which means both numbers that make it up, the K and the D lines, the blue and the red, are going sideways over 80 for several days or more, that means on the pullbacks, the market's still well supported and you're in a bullish phase. That is the case still. If the red line closes under 80, it often leads price down to the 18-day average of closes. Not always, the word is often. We come to the NASDAQ, a little bit of an attempt at diversion going on right now. As I told you, Google's getting hit, and you can see the red line, well, it's flirting with trying to get back to that 80 level. It hasn't done it at this point. It could do it tonight when it reopens. Should the market take out Friday's lows, and that number was 77.55.5, well, that could be enough after hitting these Bollinger Bands for the market to make want to retest that 18-day average of closes at 76.92. More important, what it would do for me at least, and that's just me, not necessarily somebody else, you could end up with lower highs, lower lows at that point if you were to take out that number. So I'm seeing a little bit of a warning happening right here. In the Dow, what we've done is we've just gone flat in this market. It's gone through an awful lot. It's absorbed Boeing and other news during the past month or so. But look, it held the one test of the 18-day average. Let's assume it decides to break from here. Well, then the lower Bollinger Band, from my perspective, comes into play at 26.12. Let's assume the market wants to rally from here. Then the upper band at 26,692 comes into play. And that's also a record high. So we're going to find out very shortly how this market wants to act because we have so much information coming out this week. Now, there's been a rotation, and I was talking about that today on a TV show. And I was saying that you've got to keep your eyes where these things go. Look at how the higher lows, higher highs, suddenly the Russell came alive as maybe the NASDAQ is backing off. That doesn't mean this is a better or worse buy. That's not the issue. The issue is it got up to its upper Bollinger Band and ran into resistance. It's also overbought. In the VIX, look at how flat this market's gotten against the 18-day average of closes. Now, last week when I was out for a day or two and my mom had gotten sick and still is, the market got up to the upper Bollinger Band. What I teach is the first challenge of a lower or upper Bollinger Band. If it's lower, I think the pros are writing puts, trying to get and hope the market gets back to the 18-day average. The quicker it happens, the more profitable that trade is because you don't get time decay typically in it. I think they wrote calls on Thursday looking for the 18-day average, which they immediately got on Friday. And right here, I think they're neutral in the market. Is there a trend? Well, it's slightly higher. Higher lows, higher highs. The settlement today is over the 18-day average. So yes, I'm going to call the trend up in this market. Maybe the resistance comes in at the upper Bollinger Band again. In the T-bond market, the market is fighting a battle very clearly at the 18-day average of closes. If you and I come back here, you can see how you had fought that battle here, then you drop down. Remember, when futures drop on the interest rates, it means real yields are going higher. So the market came down here, then all of a sudden had this one day up. So now you've got higher lows, higher highs with resistance at the 18-day average of close. Momentum had been embedded. When you lose that, you often go to the 18-day average. It literally all happen at the same time, which takes away some of the trading opportunity at times. It started playing there on Thursday, Friday. You can see it's still just doing that, but it's a big week. I would expect the market's going to now, the pros waiting to see what the Fed does. The market is expecting not so much out of the statement that comes out at 1 p.m. Eastern time on Wednesday, but more the press conference afterwards, about a half hour later, from Fed Chair Powell. In looking at the 10-year notes, you've got the same thing. You go up and you keep fighting at this 18-day average of closes. In the TLT, you've pulled back under the 18-day. Now this market, if you take a look at it, right here, you had your embedded reading. You lose it, and like the futures, it went right there. You didn't have much of an opportunity to trade against it or trying to catch a trade one way or the other, but it's neutral. The dollar index is backing off from having been over the upper Bollinger Band. Momentum is very overbought. You, for any reason at all, can get a pullback here, and the 18-day average could come into play. The market could even hang around right now that upper Bollinger Band. The trend is up. You've got higher lows, higher highs. The bias is up since you're over the 18-day average, my definition of bias at least, but you have one kink. You have a market that's lost its upside momentum and it's starting to point down. In the eurocurrency, it's the mirror image. We're going to find out tomorrow how good or how bad France and Italy have done. Everyone's really going to be focusing on Italy to see, is this a problem for the whole Eurozone? How bad are things getting, or are they proving that spending more money will get them out of trouble? We have our doubts about that. Lower highs, lower lows. You spent couple of days here under the lower Bollinger Band in oversold territory. You bounced back on Friday with an outside day up. Now, if the market can stay away from that, what happens is at least you're getting a bounce opportunity. You're not embedding, you're just oversold in a downtrend with resistance back near the 113 area. In the British pound, the resistance in this market is back up between the 100-day average in green and the 18-day average. If you take a look at this market, if it makes any attempt tomorrow to be higher, it's going to lose this embedded reading, and that often puts price and the first of the key moving averages into play with each other. In this case, it would be the 130.39 level, 130.39 on the British pound. That would be the number I'd be looking for. So the market's got a shot here if it gets anything friendly to get you a little pop. In the Japanese yen, the resistance has been this way. It's been the 18-day average of closes. You see it very clearly right here. You've got a market that's got higher lows, higher highs, settling with bias down, and it lost its embedded reading. Right, that was embedded right here. And again, it's one of these times where it just popped right to the objective, the 18-day average, the closest moving average, and literally has been into a stall since that occurred. Now in Bitcoin, I hope you switched over. You're no longer in the April, you're in the May. While I was gone, what the market did, I can't get it to go back. I don't know if it will. It may not have enough data yet, it doesn't. Lower highs, lower lows, resistance, the 18-day average. When you lost the embedded reading, the market fell back to that 18-day average. What's the trend right now? Down. What's the bias? Down. You're under the 18-day average and momentum's down. Resistance back at 52.14. When looking at Brent versus WTI crude, you've gone from roughly the 610, 6.25 area up $3, and now you're starting to give back the first dollar of that gain. You can see here that when this market, this was embedded reading, watch the red number here. You close under 80. There it is. It all happened at one time. You went right to that 18-day average. You neutralized the market on Friday, and today it's just sort of looking to see what's going to be. We get API numbers and EIA numbers out this week, so we'll all look at those. You lost your uptrend the same way in the WTI, so these markets have made a short-term peak in price. In gasoline, you lost your embedded reading. Expect price and the 18-day average to come together now. Does it have to? No, but you're in that time frame. When you lost the embedded reading on Friday, you still didn't get down to 251. You missed it by about 80 points. I don't call that hitting it, even though it's a big break. It didn't try to do it today. I will be surprised if it doesn't hit it over the next day or so. What you wouldn't want to see is the market back over these highs. That would throw that theory right out the window. If it hits that, the question is, can it drop even more as we get down here? And last, the Nat Gas. Nat Gas is closing with a mild gain. I wouldn't be surprised because it's lost its embedded reading, and that happened right here. It's embedded on Thursday and lose it on Friday. Right through here, I'm still looking for price and the 18-day average to come together. So there's an awful lot that is going on, and one of the things that you want to look at times like this are there seasonals at work? Seasonal plays. You certainly got grain planting. We're at that funny time of the year just before it gets warm from the summer. We had snow this weekend in Chicago, a lot of it, 700 planes canceled. But my point is, there are seasonals that you want to look at and see what markets tend to do at certain times of weeks, years, wherever you're at. Do seasonals always work? Let me share something I'm going to tell you right now. I don't know anything that always works. You're looking for things that give you an edge, and you're playing the probabilities. But just because a trade may have worked 15 years in a row doesn't mean it's going to work that 16th. Because it's lost 15 in a year doesn't mean it's going to lose on that 16th. Seasonals are an important tool. They're just another one of the tools. They really explain all this, though. When we set you up with that 2-week trial, you're going to get reports. You're going to get explanations as to how this works. They will send you out the trades that what have their percentages been in the past, anywhere from 30, 15, and 5-year periods, specific entry and exit dates. It applies to, and that's the key word, be it financials, agriculture markets, the synthetics. It can be so many different things. It's worth looking at. give us a call. There's a free trial if you want. Just go to our website, sign up for it. We'll make sure you get all signed up. You can click up here if you're also watching me on YouTube. That'll take you where you have to be. With that, I'm Ira Epstein. You have a good day.